So hello, I want to here pitch my basic business idea. And the idea is not very complex, but it's also a very important problem related to investors and traders in the Indian stock market. So what's the big problem? So basically, India is a very unique market in terms of stock market. Although India's participation in the stock market used to be fairly low, but in recent times, especially after COVID, a lot of new investors and traders have came into the Indian market, right? So what has done there is a lot of options trading happening in India, and the volumes are so surprising that even I was shocked initially when I looked at the data that India, in terms of volume in option trading, is the biggest market in the world. Literally, I was like blown away how it's possible, right? Because our market size isn't that big. Our market capitalization is around 5 trillion, right? It's nothing compared to the US market. So the thing is, there is a lot of like gambling like things happening in terms of options, and we will discuss why it is happening. But here let's discuss a report by SEBI, which was launched in 2021 and subsequently in later years also, which highlighted a very important thing, that in options trading 93% of investors are losing money. And there was a very famous tweet by Nikhil Kamath that on Zerodha platform, less than 5% of people are making FD returns in options. That means that there is a very small section of people who are making money through options trading. And the reason is there that options are a very complex product. And every time, mostly, the person who's going to make money in options is the option seller. And selling requires a lot of margin requirements and cannot be done by everyone, right? Retail investors do not do option selling, they do buying, because buying is very cheap. Like literally I can get premiums as low as rupees 20 per share, and a lot in Nifty is around 30 or 25. I guess 25 is a minimum lot size. One lot is 25. So the premiums is literally 500 even sometimes, although it depends on the strike price and all. So that is the thing, that option buying is very affordable and option selling is very unaffordable for investors. But there is also one other segment which is actually neglected in India, one more derivative segment, which is the futures. Futures are a very simple uh, derivatives contracts as compared to options. Very simple, because they just track the underlying uh, which they are. They just their value just depend on the underlying, which is, for example, if there are Nifty future, it just track Nifty. Obviously it's a leveraged basically contract. So that's the main thing why we use derivatives, because they are leveraged, so we can potentially make investors and traders can potentially make more money. And the main thing is, this is the major part, is that almost 42% of the investors are profitable in futures. And when I saw this data, I was like very intrigued. Like, if if futures are so much beneficial, is so much profitable to trade as compared to options, why on the earth are people trading options? Because seller is always going to make money. So these 7% people who are profitable, they are mostly sellers. These are not buyers. So the problem I encountered was this: is there's a barrier to entry which is very high. The lot sizes in India of futures is very high, and I will show you subsequently what I'm talking about. So look at this. If I want to trade just one lot of Reliance futures, Reliance, to tell, Reliance share trades almost around 1200 rupees currently on the stock market. You have 500 quantity as a lot size, and for buying one lot, you literally require 6.4 lakh in premiums, even for one lot. And obviously if some trader is there, he is not he's going to make multiple trades in a month, right? At least if you take 10 trades, so he need capital of 64. Obviously it's not 64 lakh exactly, because this capital will be circulated, you will get the point. But the point is, there's a very big barrier to entry in the futures market. And futures contracts are very simple to understand, because there is no option basically option premium decay, time theta decay. Basically there is no volatility premium. There are no option Greeks in futures. It's a very simple contract that if you are trading underlying, for example Nifty underlying, if you are trading, it just follow Nifty, right? Obviously it's a leveraged. So if for example a future is like, I'm talking very crude terms, is 10x leverage. So if Nifty moves 1% up, so a future is gonna move 10% up. It's very simple to understand as compared to options, because option there's a lot of complexity. There are put, there are calls, then there are you can sell a put, you can sell a call, you can buy a put, you can buy a call, multiple permutations possible, right? In futures it's very simple. It's like selling or buying a stock, but just it's leveraged. That's the main point, because then your potential profits are more, right? So this was the problem that I encountered, and the solution is simple, is launching ETFs. So what's ETF? ETF basically it tracks the underlying. So for example there are already Nifty ETFs which tracks the Nifty index, and they are priced accordingly. Like these are called exchange traded funds. So the solution is here can be that a future contract can be made in a form of an ETF, and that ETF could be listed and traded in the stock market. So what advantage does this provide? The advantage here is the uh, the margin requirement of a future contract can be then splitted among thousands of investors. So potentially maybe you can, what happens in mutual funds, that there is NAV and each unit, so it has some price. So for example let's say in our case maybe we are trading a Reliance future, maybe it will cost rupees 10. So so if you want to just buy 1 unit of this Reliance future ETF, you just need rupees 10, right? Against what we encountered a 6.4 lakh capital, which is, so this will make futures very affordable for retail investors. So this is the whole idea about this thing. So where is this idea coming from? It's not very unique or very difficult to implement, although there are some regulatory hurdles. But I got this idea from looking at FMCG. So how these companies like HUL, Nestle and all, how do they boost their sales? They discovered a very important thing in India, that if they were selling, for example, HUL is selling Dove shampoo, right? If they are selling Dove shampoo, so maybe a bottle cost rupees 300, and for a rural audience that's maybe inaccessible. But then they launch these small 3 grams, 2 grams, 2 ml sachets, maybe cost rupees 1, rupees 2, 50 paisa even, and then the sales just skyrocketed. A simple thing of miniaturizing something can have such a dramatic impact on the sales, and because India is a price sensitive market, and if you do this you kind of capture the India 2 or India 3. That's basically the whole point. So what's the value in having this idea is accessibility. It provides futures trading accessible at a fraction of cost, because there will be no margin requirements. It could be a simple ETF that could be bought and sold, right? Similar to the stock, which can be bought and sold very easily, right? So retail investors will be more profitable because there is no theta decay associated with futures. There's no volatility premium as what happens in options, right? In futures there's no concept of volatility premium. So if you're not familiar with these terms, basically the premium of an option is a sum value of the implied value plus the time value of the option and then the volatility premium. So if you not get this, it's okay. uh, so that's the point. There's no very much complexity. It's simplified, it's more profitable for investors. It will democratize derivatives market to common people, right? And the model is very scalable because it's just launching ETFs, right? Also, we're gonna plan in future, obviously, on the platform, better risk management practices uh, in our these future ETFs. And these can be in the form of options live, like safe exits and all, so that a better risk management can be done by people, right? Also, one more thing that can be integrated in these ETFs is a concept of basic algos. So what do I mean by this? So basically, uh, how basically trading is basically done is individual investors, they look on certain factors. Maybe somebody is having a strategy, trading based on RSI. So he says basically that if the RSI is uh, less than 30, I basically buy that stock or something. If the RSI of the thing is greater than 70, I sell it. And he does it manually, right? But the whole process, but these whole things can be automated with the help of basic algos, and that can be set, and they will incorporate these risk management practices, and this will be available for retail investors on subscription basis, right? So first, the main focus is to get investors through these ETFs, and then gradually go to more profitable things, because in ETFs essentially just the way of making money usually is get charging a fee. And for example, in Nifty ETFs, the fee is very less, like 0.5%, but these will be futures, so we can charge maybe 1% fee. But ultimately, you want to migrate to more profitable things, right, in the future. So what's the market opportunity? So in India, if 100 rupees derivatives are there, 70% is options. Rest is futures and other things. Option volume is 400 times the trading volume in cash segment. I was just blown away by this fact that so much option volume is there in India, and there's a reason, because people treat these option buying as lottery tickets, because there's a very small premium and potentially you can make a lot of money, right, if you get lucky, but that's usually doesn't happen, right? Uh, so we're gonna see, we want to migrate people from gradually from options to futures. And even if we are capable of getting just a 5% market share of options, that's a huge market share. It's literally a huge market share, right? So what's the business model? How we gonna plan this? So basic thing is charging commission on the ETF. Every ETF transaction, we can charge a 1% commission, or even the commission can be lowered in the future, right? The second thing will be subscription for the basic algorithms uh, that will be developed by us, and this will be available to retail investors. So what's our plan? Uh, it's a basic plan. So first, we can start by launching very basic future future contract ETFs. The first can be a Nifty ETF, then we can follow it by maybe a Bank Nifty future ETF. Then we can get a Sensex future ETF. Then we can get a like maybe a Fin Nifty future ETFs and so on. So first we will start with index level. Then we will go to individual stock futures ETF we will launch. So the goal is to at least get 20 ETFs expand in the next 3 years, right? Uh, also, we want to introduce a very interesting thing called sectoral futures ETFs. So what's the whole concept? So uh, there are sector specific funds, right? Are there sector specific, even ETFs are present, but there's no sector specific future ETF. So can I create a future ETF, a ETF of future of stocks, and all these stocks can be from a particular sector. For example, I make maybe let's take an example, uh, a real estate futures ETF. So what can be done here, that all the real estate stocks which are present in future and options. So all stocks are not will not be there. So for example, there are 4 stocks, 1, 2, 3, 4. Let's suppose A, B, C, and D. So every stock will have some weightage, and after that weightage, the futures will be calculated, and then a ETF will be made of these stocks, and this will be called as sectoral ETFs, right? So this we will also plan to launch. So what are if I have any projections, so even if we can get 1,000 crore ETFs transactions, contract sizes in the future contracts, even with a 1% commission, we generate 10 crore revenue, right? This is the basic maths. And I have not included all the other revenue sources that we might potentially have, like offering our uh, algorithm softwares through and risk management practices for which also we can charge more. So do I have a competitive advantage here? Yeah. First of all, it is actually a problem solving product, because it is literally solving a pain point of an investor who is faced with having to pay a lot of basically margin. So it is more affordable. It will be much more simpler to use because there's no more complexity. You can just buy a future ETF or sell a future ETF. So if you are maybe let's say you are buying a Reliance. So maybe you are buying a Reliance futures ETF, and it's dated on maybe let's suppose 28 January. So it will be very simple. If you are bullish on the Reliance stock till the prescribed date, you can just buy the ETF. If you are bearish, you can just sell the ETF, and it's very simple, right? Also, the one more edge that it will give, because of a lot of volume, is it will give us insights on the trading behavior of people, and this data is very like valuable in this age of data, where data is a new oil, right? Also, the model can be is very scalable. Maybe we can even scale outside Indian markets. Although there is a very important thing, which is the regulatory hurdles surrounding this, which have to be solved. So this is a major problem or a risk associated with the with this business idea. So this has to be taken care of. So what are go-to-market strategies? So first thing is education itself, that how futures are much more better for investors as compared to options, and this is clearly the case. Most investors are losing money in options, right? They just know it, right? So it is obviously easier to sell a good product as compared to a bad product, right? So awareness can be through to different platforms, through social media. So we will gonna do a lot of content marketing basically here. We'll have our partnerships with brokers, with SEBI, with NSE. Obviously we need to have that. And basically the first thing is these ETFs can be purchased through any broking application, browser or whatever the person is using, because these will be listed as ETFs, so everything is accessible, and we will always have our own website and app also for this, if somebody's on something. And there will be risk management practices. There will be, for these future ETFs, there will be algorithms through which uh, simple rule based trading can be done, so that basically it remove all the things about emotions, because emotions come a long way in the whole trading journey of traders and investors. And but the here a long term is not to just restricted to that. Obviously we start small and then we gradually go along, but the main long term plan that I am here thinking is ultimately getting to the wealth management industry, which is a little nascent at this point, but all the intelligent investors, VCs and all, they are moving to this industry, be it our Kamath brothers, Nikhil Kamath, maybe it's the Flipkart founders. They're also exploring this space because it's a very nascent space in India, and because wealth is growing very at large space, there's a lot of requirement for wealth management, and ultimately we gonna go to this route, but we need to start somewhere. We have to build some our expertise that will be through this our future ETFs. So I've done some basic financial projections. So if even if in year one we are successful able to do some transaction of 50 crores, which is a very conservative figure, we're gonna generate a 50 lakh revenue, right? If by year three, if we're gonna generate a 500 crore transactions, which is by the way even not 0.1% of the trading volumes of futures or even options to that matter, it's it will be 5 crores, and by year 5 if we get 1000 crore of rupees of transactions, so we can generate 10 crores in revenue. So obviously these are very like conservative figures. If us idea gets successful, these can be much higher, but I think it's better to be conservative in the starting when you are starting, so that your expectations are under control. So what's my ultimate vision here? Is basically I want to basically revolutionize a whole concept of retail investing. And in long term, if all the brokers or management players or whoever wants to be like successful in the long run, I think they will be only if retail investors will be successful. And we just want to make that the life of retail investors much more easier, and we want that they should be profitable, and trading should be affordable to all, and that's the whole point of doing all this. So thank you, and these are my contact information, so you can contact me here, and thank you.